please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Closing bell, I'm Anuj with Ms. Surabhi. Hi Surabhi, good afternoon.
Good afternoon, Anuj. And yeah, it is turning out to be a tale of two halves, as you were saying in the morning, that, you know, the market still looks vulnerable. And that's what's playing out right now. I mean, as we're starting off closing bell, we're pretty much at the lowest point of the day. The Nifty 50 is obviously down and banks are selling off. Mid-caps also, that index which was doing so much better in the morning. Now a lot of gain has come off there. So what's the take now for the last hour?
Yeah, you know, Surabhi, you know, I had said this in the morning as well that, you know, the data is looking positive. Of course, the bull market is intact, but the absolute near-term texture has changed a bit. You know, clearly, you know, yesterday the Hang Seng was up 600 points, still we could not rally. And today also, you know, if you had sold at the high point or at the opening rally, you are making money. So the near-term texture, just want to differentiate here, is that, you know, the bears want to try a sell on rally trade, and that trade is working for now. So let's see, last hour could be really interesting. For me, you know, there are 2 or 3 anecdotes that I look at. One is Maruti and HDFC Bank. You know, so these are the stocks that normally lead the market correction. You know, whenever you start to see Maruti, Eicher Motors, HDFC Bank, these stocks underperforming, and the likes of Fortis going up, you got to be a bit cautious that, you know, okay, things are looking a bit wobbly. So was on the cards. You know, the template is in place for a bit of a last hour sort of fall, but you know, I could be wrong. There could be some recovery as well. But 10,500, 550 is proving to be a bit of a resistance mark for the market. This is one of those phases the market goes through, you know, consolidation and correction. And anecdotally, if you buy into this zone, you make a lot of money. But this could be this is looking like a bit of a tradable correction, and the mid caps have recovered from the lows, but once again the quality of stocks, I think that, you know, needs to be watched out for as we move into the last hour of trade. Yourself in this last hour of trade. Ashwini Gujral and Mitesh Thakkar now join us. Good afternoon, Ashwini. How would you classify the day today? Because, you know, it's now in flat territory. The Sensex, Nifty, Bank Nifty all trading flat, but the mid cap index is still up about 0.5%, and advanced decline is about 2:1. Is there a trade for last hour, and what would be your stock calls?
See, my key takeaway is that the Nifty futures high was about 10,550, and the Bank Nifty high was about 25,500 thereabouts. So today would qualify as a retest, and a retest which has you know, succeeded, which means that the level that was getting tested has held on. You know, mid caps will turn on a dime, and by the end of the day, you'll see, you know, how many stocks are left in the advances. But as you said, if large market leading stocks start to fall, then, you know, you are just sitting on the cusp of a correction. Now we are just kind of waiting before those large, big downside moves start to happen. But overall, today's holding of levels at higher levels have shown that possibly market is getting ready for a decline. So going into the close, even now, I think Bank Nifty, you can sell, and probably you'll make some money by the end of the day. But positionally, we are holding short positions now on several financials as well as the Bank Nifty. In terms of individual stocks, I think Maruti has started a big correction. That's a sell with a stop of 95.50, target of 93.50. Voltas is a sell with a stop of 644, target of 620. And Adani Port is a buy with a stop of 405, target of 430.
Okay, by the way, I just want to point out that today is a day of clear underperformance as well by India, whether you're looking at the Asian closing or you're looking at European screens right now. Probably some context we can keep in mind. Most of the European markets are trading with gains of 0.25%, if not more. And some of the Asian markets, for instance, the Singapore markets, the mainland China markets, they've had a decent gain as well. So
yesterday,
there seems to be a bit.
600
yeah, yesterday, exactly. Yeah.
So I think
underperformance is very clear now.
Is very clear. But you know, we outperformed as well in the last week of last year. I think that point should also be not forgotten.
Sure.
I think,
Absolutely. Okay, Mitesh, good afternoon. How are you looking at it for the last hour? What are the strategies?
So I think the index, you know, we've had a long trade in the morning, which we got kind of cancelled once the Nifty started breaking below 10,460 odd levels. So it doesn't look like a market which is trending, but The next trade could be on the short side if we break 10,420. Now that was the low on the 21st of December and again on the 2nd of January on the hourly closing chart. So I would keep a close watch there. I think we're only about 17-18 points away from that. Having said that, I think two stocks which I still like and might do well in this market which is choppy would be Bata, which is a buy with a stop at 755. We'll look for targets of around 795, and Capital First is a buy. Keep a stop at 710 and look for 755, 760 as the trading target.
Okay, fair enough. Let's move on. Time for our Stock 360 segment where we cover a stock from all angles. And today the stock that's looking quite interesting is Adani Enterprises, still up about 7%. At one point was up 9%. Anisha tracks the stock. Anisha, what's happening here?
Well, Anuj, I would be lying if I would know why the stock is moving, because I have no idea about that. The stock has not only gained around 50% over the last 3 months, but it is up over double the times this year itself. Now, in terms of the possible reasons, the first one might be the demerger, because remember back in October, they had demerged their renewable business and had plans to list it separately. But that was not supposed to happen before Q1 FY19. In fact, they haven't even got the shareholders' approval yet. There is no record date that has been announced. So I'm not sure if the excitement is ahead of that, but that could be one of the possible reasons. Also, there was further buzz that the defense and city gas distribution of the company can be demerged, because remember, they have solid city gas distribution business. They have 4 cities under them currently, and the JV with IOC was expected to bear fruits and add more cities to that. Defense is one space that everybody has been talking about. We have seen the run-up that has happened in Reliance Naval as well, so maybe a bit of reason for that as well. If you're looking at the problems in the company, well, the biggest problem child has been the coal mine in Australia. The company has not been able to find a solution for that. They have not got the funding for it. They had to part ways with Downer, the company that was going to operate and mine that project for them. Other than that, they have got major pushback from the Australian government as well as people there, and the situation is very dicey for them because they can't even let go of that project, because analysts say they have invested around $1.5 billion in this $16.5 billion project already. In case they want to scrap it, their debt would be much higher than their book value. Even if you look at the situation now, they are trading below their above their book value. The price to book value is over 1 times. So that is because remember, the book value earlier was around 100, 103, but now that has become a bit more difficult to manage in terms of the valuations as well. Back to you.
Okay, Anisha, thanks a lot for that. The Sensex, the Nifty are in the red now. 3 points lower is what we have on the Nifty. The Bank Nifty down about 13 points right now. The mid-cap index also off the high point. Advanced decline at about 2:1 right now. SP Tulsian of sptulsian.com and Sudeep Bandyopadhyay now join us. Good afternoon. Mr. Tulsian, your thoughts on the Adani Group and the rally that you've seen. I know in the past you've had positive view on stocks like Adani Ports, but and Adani Enterprises as well. But do you think this rally has legs?
So, in fact, I have said this many times that I have a positive view on all Adani stocks except Adani Power. So you have to include Adani Transmission also in the same breadth, that is of Adani Port and Adani Enterprises.
Yes, so do you think this rally could continue, Mr. Tulsian, on Adani Enterprises? Because it's had a big run over the last 3 months or so.
See, again, if you take the case of Adani Port, I think it has its place of its own organic growth as well as inorganic growth. Now they have become undisputed leader in the port. Come on the Adani Transmission, again the largest player in the private sector T&D space, which has a huge potential. Mind it that Power Grid is only controlling about 50% of the T&D space, and if you have the electricity for all program of the government by 2019 or maybe by March 2019 in next 1 year, there is ample scope for the T&D space to happen, and Adani Transmission will definitely be having a larger share of the larger pie of the cake to their credit. And coming on the business, having acquired of T&D from Reliance Infra of the 500 megawatt thermal power as well as the 3 million customers in the Mumbai city, that is seen taking a big new diversification by Adani Transmission in that space, because you have very selected players available in the T&D space, along with or maybe integrated play like transmission and distribution. Maybe CESC and Torrent Power 2 are the only listed players who have presence in all the verticals, and now you will be seeing Adani Transmission coming in that space. Now come on Adani Enterprises. If you really take a call, I think everything hinges around on their Australian Carmichael Road project, Carmichael Mine projects of about $17 billion, and that is going to see the light of the day in spite of the $2 billion contracts having cancelled by the logistic company because of the non-sanction of the financial limits and all that. Because Australian government will not allow this capex to go down, and because of the huge capex and huge employment opportunities seen available. Come on the other restructuring, small restructuring like city gas distribution, with that itself is another area which can really grow manyfold, which has all been till this date has been of the domain of the public sector units, maybe like MGL and IGL. So you have ample opportunities, and Adani Enterprise, even if the restructuring gets delayed, I am not too worried, because obviously the verticals will get straightened out. Only the synergistic verticals will continue to remain in the business, and I don't see that maybe city gas distribution or maybe the renewable power portfolio is having any sense to remain in that company of Adani Enterprises. So yes, the main focus lies on the Carmichael mine projects of the coal mine of $17 billion, and that is going to be the kicker for this share also to rise from here on. So these are the reasons for taking positive view on all three Adani Power stocks, Adani Group stocks.
Okay, that's the Adani Group, largely in positive territory today, with, of course, Adani Enterprises at a 52-week high. The group that's kind of out of favor today after its recent absolutely stunning rally is ADAG. In fact, all those stocks are mildly negative, not too much. Reliance Naval, of course, has fallen once the announcement came through of the government scrapping the Rafale deal. Sudeep Bandyopadhyay is joining us on the show as well this afternoon. Sudeep, good afternoon and New Year greetings. Your thoughts on Reliance Naval? After Reliance Communication, this is the next stock that the market chose to latch on to, and now this news coming in.
Good afternoon, Survi, and wish a very happy New Year to all of you at CNBC. I think, Reliance Naval has got lots of inherent problems. There is no, profit-generating, revenue-producing business which we can look at and say, yes, this is, going to give you profit, give you revenues year on year, quarter on quarter. The tie-ups which the company has on paper still, it's not on ground. It will take a long time to fructify. Of course, news like cancellation of Rafale deal definitely is negative, because the stock got pushed up based on all these news flows. And if there is a reversal in the these deals, obviously that will be negative for the stock. But fundamentally, I see no rationale or no reason for the stock to be purchased at current levels, or even at slightly lower levels. I think fundamentally we'll be able to take a view on Reliance Naval much later, when it has significantly corrected, and when some businesses are at least started producing revenues, profit and all that can come later.
Okay, let's do one thing. We'll take a break on that note. Our closing bell money control question of the day is: do you see the Nifty hitting 11,000 by the end of this month? Essentially, do you see a pre-budget rally? Log on to moneycontrol.com and post your responses, and we'll read out the most interesting ones post 3:30.
And on the other side, our newsmaker today is Dr. Reddy's at EIR. The establishment inspection report reveals it all is perhaps not well with the companies.
The market is quite okay. In fact, the mid-cap index is back to not quite at the highest point, but still looking up on that one. 2:1 advanced decline. Ashwani and Mitesh with us for BTST calls. Buy today, sell tomorrow. Ashwani, your thoughts first. It's ending flat for the index. Any key takeaway and stock calls?
The key takeaway is that we are still at the lower end of the range, not able to make headway on the upside. Maybe you will have some triggers needed for a deeper correction, but slowly the tops are coming down, and the bottom is still about at the same place, around 10,400, 420. As far as stock calls are concerned, Jet Airways is a buy with a stop of 858, target of 890. BEML is a sell with a stop of 1540, target of 1480. And Equitas is a sell with a stop of 147, target of 135.
Okay, all right, those are Ashwini's trades. Mitesh, let's come to your ideas. Looking to buy or sell now?
So I have one buy and one sell. I have a buy on Z Media that's making a fresh high. So buy with a stop at 47, look for 52 as the target. While one sell, that's on Ajanta Pharma, where after a good rally, The intraday charts are slightly turning negative, so sell with a stop at 1472 types and look for 1435 as the target. And would also want to flag off one more stock. I think it's already moving up. Philips Carbon, I think, has had a big breakout in the last 20 minutes or so. So if it comes down by about 20-30 points, that's a buy with a stop at 1040 and look for targets close to about 1200.
Okay, that's some interesting stocks. Philips Carbon. The way some of these stocks have moved, really, it looks like that correction that they gave. At that point, it looked like just pull out the chart, say Philips Carbon, a 1-year chart of that stock, if we can. And the kind of rally that you've seen in some of these stocks, of course, there was, what I mean, where do you enter?
Even correct that
Exactly,
others, yeah.
exactly. I mean, talking about earlier stocks like Rain Industries, probably Graphite, Goa Carbon has been one of these stocks. So some of these stocks where the China factor has been dominant, at corrections it looked like maybe that big run was over. But if you bought into that correction, again, you made a lot of money. So phenomenal the way some of these stocks have moved. So, Deep, any thoughts on any of these stocks here?
Well, I think, Anuj, this entire industry in India is going to have a huge potential going forward as well. You're talking about Philips Carbon, the entire carbon black industry, particularly in Europe and US, the manufacturing is getting closed and the facilities are moving towards Asia and other parts of Africa. So India, with the kind of knowledge and technological competence we have, a significant part of the chemical manufacturing is going to come to India. Of course, China is a big factor and Chinese plant closures help Indian manufacturers. But overall, this entire manufacturing activity is picking up and Indian manufacturers are getting more and more visibility as well as market share in the global markets. So companies like Philips Carbon Black, Oriental Carbon, these have an excellent potential. Yes, they have moved up quite a bit, but even from current level, if somebody they can safely get into Philips Carbon Black or, even the other chemicals, Himadri Chemicals or even, let's say, Aarti Industries. They all are different companies. They all are into different chemical manufacturing, but potential-wise, all of them have significant potential over the next 2 to 5 years.
Many of the chemical companies are actually doing really well today, niche chemical plays, that is. Well, on that note, let's get you some more market opinion. We caught up with Pramod Gubbi, head of equities at Ambit Capital. Began by asking him whether he thinks this year could be any different from the last one. Take a look.
Yes, I mean, I don't think, this year will be able to match last year's sort of returns. And also the nature of the movement will also be slightly different. Remember, the last year was yet another year where we had, stock prices doing well, multiples expanding without underlying earnings expanding or any sort of meaningful recovery in the economy. Now, this year, that situation could reverse. I guess it's about time earnings growth picks up in terms of contributing to stock price returns over the multiple expansion. In fact, you could see some sort of compression in multiples, or at best stability in multiples. So it's about time the recovery in the economy that we're seeing now also trickles down into corporate profitability improving. And finally, we see some sort of a double-digit or even a 15% sort of earnings growth to the index level.
Or the next year, for FY19, you mean?
That's right, for FY19.
But, look, over the last 48 hours, we've got some fairly decent macro data, the core sector numbers, the PMI numbers, and of course, the commercial vehicle numbers. For all the three companies, it showed a quantum leap over the kind of average sales and output that they've been showing over the last 2 years. Is that making you want to look at even the current quarter and the next quarter differently in terms of earnings?
Yeah, I think there'll be two forces at play here. So one is, of course, the base effect. We saw the base we are looking at is the December 2016 quarter, which we all know wasn't particularly the greatest. So you will see some really large numbers as far as year-on-year growth is concerned. But we'll also see perhaps the...
if I may interrupt,
Sure.
This is even without the base effect, if you looked at the monthly numbers of the three commercial vehicle makers, Tata Motors, Ashok Leyland, it is even, we have taken an average of the last 24 months and the December performance is a good 20 to 25% higher. This is even without base a very good number. So should we look at it differently?
Yeah, actually, exactly. So that's what I was coming to in terms of the second force that is at play is perhaps the earliest signs of the recovery in the underlying economy, particularly in areas like cyclicals, industrials, manufacturing. We've been talking about the sort of, in some ways, a quasi-fiscal stimulus that the government has provided through both tax rate cuts and sort of easing in terms of the taxation element itself. And from our discussions with people on the ground, you clearly see, that's already at play. What we thought would start from Q4, we've already seen that happening through perhaps late November and December as well. So the second piece is the more interesting one, and that's where we get more confidence that the economy is clearly on the mend, and we should see better numbers at the aggregate level, as well as at the company fundamental level as we progress through 2018 calendar year.
Okay. Pramod, the budget is the next big event that everyone's watching, right? And this is the first post-GST budget. This is the current government's last full budget, so all eyes are going to be on it. What's your expectation?
I think it's unsurprising that the government will go for some sort of a stimulus package in the budget, given the state of the economy, as well as the need to create jobs, particularly ahead of an election year. And I think you will see several initiatives within that. And in some ways, we've already seen the government acknowledging the fact that we will slip on the fiscal this year. That should also give them some room for the next year as well, because otherwise the 3% target would have been too steep. Given the need for a stimulus package. So we do expect quite a few fronts on which the government will help or give a helping hand to the economy, particularly with a focus on job creation. I guess the rural sector will also get some sort of benefit through revenue expenditure. And finally, the tax stimulus that I just talked about should see continuation in the FY18 budget as well.